Uh, in a world where electric fantasies meet fierce competition, the exciting news we have for you today is nothing short of revolutionary. The Tesla stock is about to explode. Get ready for a ride in the electric car fast lane, where Tesla is gaining ground on rivals and advancing towards supremacy. Don't miss this exciting opportunity. We're going to reveal the tactics, catalysts, and insights that can help you realize your investment goals. But before we get into the exciting specifics, please remember to show your support by clicking the like and subscribe buttons. This is Tesla Hype, and we are excited to share this video with you all. However, as we consider a note from an analyst at Deutsche Bank suggesting that Tesla may fall short of expectations by a few 100,000 deliveries this year, we are forced to consider whether or not this is the right area of focus, given how quickly Tesla is advancing in the electric vehicle market. Once aspirational milestones, should we be fixated on these shortcomings? Think about this. Just 5 years ago, Tesla's yearly sales were roughly 100,000. Today, they are quickly approaching 2 million. This exponential growth is not only admirable, but astounding, as rivals like Ford struggle with unanticipated setbacks like recent plant delays and many others in the EV space scramble for crucial capital. Tesla's momentum only seems to get stronger as we negotiate the interest rate fluctuations beyond the realm of numbers. However, there is a much deeper story to be told. If you venture into the world of electric vehicles, you'll quickly realize that Tesla isn't just a participant. Rather, they're orchestrating the symphony, setting benchmarks, innovating relentlessly, and laying out your roadmap for sustainable future across various sectors. Cycles, it appears Tesla is strategically positioned to leverage these shifts, greatly benefiting from the Fed's current policies. Tesla is a source of inspiration. Picture a high-stakes race, if you will. Tesla has unparalleled gusto, is leading the group as rivals both established and emerging scramble to match its success, while several up-and-coming EV firms want to be as successful as Tesla. There are many obstacles and unknowns on their path. Beyond simply being a car manufacturer, Tesla is spearheading a movement towards a cleaner, more sustainable future thanks to its technological prowess, remarkable brand loyalty, and visionary leadership. The globe eagerly awaits the release of new models. One cannot help but note that as innovations and discoveries emerge from the Tesla stable, they redefine what we previously believed was feasible in the automobile industry and shift gears to address the discriminating investor community. The delicate balancing act they must perform in the current state of the economy for people who value security, stability, and assured returns the state of investments seems to be both promising and difficult. It's hard to resist the allure of a 5 government guaranteed return, especially when combined with current economic statistics that suggest inflation is on the decline. This situation presents the allure of steady, risk-free profits. It is dependable and consistent, like the quiet hum of a well-oiled machine. But when historical data is examined closely, a different image is revealed. The stock market has historically produced an average annual return of roughly 10, which is significantly higher than the 5 safe haven we are talking about. This begs the question of whether investors are possibly leaving money on the table, and the difference is even more noticeable when you take the impact on long-term financial goals into account. Say, for example, that retirement is imminent. 5 return may seem reasonable at first, but over a number of decades, the compounding effect of those missed percentage points can be significant. To put it another way, being content with 5 may unintentionally push those golden retirement dreams farther away, making them seem more elusive than ever. For this reason, the question no longer concerns only immediate returns, but also aspirations for the future. Prepared to brave the turbulent waters of the stock market in search of maybe greater rewards, or are you looking for the instant comfort of a guaranteed return? The response could potentially determine the course of your financial future. Do they choose a stable treasury bill, or do they enter dynamic arenas like Tesla, which are rife with opportunities for growth? Every investment decision comes down to risk tolerance. And if you've been watching Tesla's stock trends closely, you've probably noticed that the company exhibits intriguing peak and trough patterns. As for the stock's future trajectory, that's anyone's guess. But based on our analysis of its valuation, it's clear that Tesla continues to be one of the market's luminaries. As we all embrace the exciting prospect of electric mobility, we can't help but wonder if Tesla is the unwavering force shaping our journey. Recent developments in the electric vehicle space have provided an even more compelling picture. The Wall Street Journal recently highlighted Tesla's creative solutions, focusing especially on the mega packs, which are more than just battery packs because they're revolutionary technologies. Utilities are realizing this, which is driving a spike in investment in Tesla's revolutionary battery systems. How perfectly imagine the oppressive summer heat. Places like Texas and California were on the verge of potential blackouts looming. Enter Tesla with their mega packs, stabilizing electrical grids, and essentially saving the day. Let's tackle the big issue. Tesla does face short-term issues related to factory retooling and variable rates, which would cause most companies to struggle. But look the other way. After this brief blip, say a 3 to 5 year horizon, Tesla shines brighter than any other established automaker. Even the quick-witted Chinese manufacturers have their work cut out for them. Keeping up with Tesla will be difficult given the flurry of new EVs that are being released onto the market. This is how most of us know the traditional car buying process. You walk into a dealership, middleman helps you, and eventually you drive away with a new car. However, there's a catch to this model. You're not just paying for the car. A portion of your hard-earned cash goes to the dealer, another portion to the distributor, and so on. Tesla saw this and thought, why not simplify instead of using this fragmented multi-tier distribution model? They chose a direct-to-consumer approach, which means that when you buy a Tesla, you're dealing with a company directly, cutting out those annoying middlemen. But what are the ripple effects of T-second by bypassing dealer markups and the profit sharing that follows? Tesla keeps a larger portion of the sale, and the healthier profit margins that result have financial pundits and Wall Street analysts scratching their heads. This isn't just a revolutionary approach to car sales. It's also a shrewd business move, given that autonomous driving has been around for years. Many automakers have experimented with adding functions like parking assistance or adaptive cruise control, but in 2016, Tesla chose to leap rather than merely move into the future by beginning to construct a fully functional, all-encompassing self-driving system that they called FSD. Why did this change the game? While other businesses were just getting started, Tesla was preparing for a marathon with cars that were not just built for the present, but also for the future with all the hardware needed already installed. Tesla made sure that Tesla vehicle could be converted to complete autonomy with just a software update once the FSD software was ready and rules allowed. This strategy is similar to getting a smartphone ready for 5G networks ahead of time so that when the technology becomes accessible, you're already set. The same idea applies here as rivals rush to retrofit their vehicles and catch up. Owners of Tesla vehicles are on the verge of a revolution in transporting. Self-driving technology is just a few updates away from becoming a reality. Have you ever overheard investors conversing in a coffee shop? Tesla is always the buzzword, but what most people fail to realize is that the company is advocating for a more environmentally friendly and efficient future that encompasses not just driving, but also manufacturing energy solutions. Keep in mind that most businesses are good at let's talk about efficiency and innovation in one fell swoop. Tesla altered the rules, eliminating profit sharing with middlemen and sending information directly from the factory to you and me. So let's talk about the FSD. Beyond the shiny exterior of a Tesla, there's something else that makes it standard. Dive deep into the world of autonomous vehicles and you'll notice a glaring difference except for Tesla. Some might argue about why Cruise or Mercury aren't car manufacturers. However, there's a distinction to be made. Most automotive giants are standing at a crossroads, either developing their own software or licensing it from these tech firms. Tesla's ambitious self-driving project has been underway since 2016, and recent advancements suggest they're setting the pace in the competition. Although useful, the latter will undoubtedly increase the cost of the car for the final user who wants to ride the AI wave. Tesla is fully autonomous. Driving capabilities are based on data as well as technology, according to prominent Tesla investor Kit Wood. This is because data is the new golden AI. Tesla's stock is dubbed the hidden gem of AI companies. As the automaker prepares for a future when data becomes the linchpin of innovation, let's dabble with some stats. Tesla has blasted off claiming the most real-world driving data. According to Cathie W. from ARK Invest, by 2030, artificial intelligence, all fake could increase knowledge workers' productivity by 4 times. That means that the income stream from AI might reach trillions of dollars. You're supposed to maximize your benefits. While the autonomous taxi industry is expected to generate trillions of dollars in revenue for Tesla by 2030. Let's not paint an entirely rosy picture. Every leader faces challenges, and while battery technology has advanced to a point where Tesla is proud of its achievements, especially with the Model S and X, innovation is a journey rather than a destination. In the world of electric vehicles, batteries are the magic bullet that checks all the environmental boxes. Tesla is aware that perfecting this elixir is crucial because there are a ton of EVs about to enter the market. So what's your opinion? Are you on board with Tesla's vision, or do you have reservations? Please share your thoughts below. If you're itching for more Tesla updates, we've got you covered. Click on the next video and we'll take you on another thrilling ride. Tesla's edge is its repeated first mover advantage in the race of innovation. While others are tying their shoelaces, Tesla is already sprinting. The world is evolving. Catch you on the flip side, which concludes this video. In today's deep dive, we have explored Tesla's innovative approaches, such as their consumer-centric direct sales model and their unmatched advancements in FSD. We have also shed light on the vast amount of data the company has amassed and gazed forward, promising horizon of robot taxis. However, despite these successes, we also recognize the mountain that Tesla still needs to climb, especially in the area of battery technology, as the EV landscape is constantly changing. It's evident that Tesla isn't just competing. Rather, it's leading the way with all of these advancements. Do you think Tesla can continue to lead? If this analysis was helpful, please remember to hit the like button and subscribe to Tesla Hype for more updates and insights. We appreciate your time and hope to see you in our upcoming videos.